Okay, Social Nines, this is going to be the first of probably three parts of the Chapter 8 lesson. I'll release this video on Tuesday, and that would be May 11th. And more than likely, I'll release the second part of it either later this week, right, by around the 14th, or maybe on the Monday after. We'll just see on that. I mean, the two things you need to be working on this week in Social 9 would be the Chapter 8 worksheet. And then on this one, you'll be going through the lesson and then completing the so-called Taxation in Canada slash Mr. Equity writing assignment. So anyhow, you should have the documents already that you'll be using today for the SMART lesson. You should have the uh, Taxation in Canada notes that look like this, okay, that you can be filling out as we go along. And then you should have the Taxation in Canada Mr. Equity writing response, in which you'll answer the 5 questions on the front page, but then on the back page, you're going to write a fairly well constructed, lengthy paragraph on this issue. All right, so there's that. So you can access this lesson, at least to the most part, by the Smart Learning Suite um, section. I think you might need to sign into it. Douglas, of course, is my name. But you can have a look at the lesson. It's just not in, I mean, you need to turn back to the front page here. So the front page is right here, and then you kind of go on from there. You can do that. Okay. But I'm going to use my own smart program. It's a little bit more conducive to what I want to accomplish here. Anyhow, with that said, make sure you have this document open that you can kind of take notes as we go along. And as we get down to the bottom here, as we talk about the underground economy versus tax evasion, then you'll be doing the Mr. Equity writing assignment. Okay, so anyways, here we go. So like I said, this is the Chapter 8 that deals with social programs. Obviously, if you have your textbook, that would be a help. Okay, I'll move this over here, and here we go. So getting started, what's ahead? We're going to be looking at taxation in general. Okay. Um, and then in the next lesson, we'll look at social programs. And then in the third lesson, we'll look at political platforms. Okay. As far as this other stuff, this is more Chapter 9 information. And I think we've talked a lot about, and we've actually covered Chapter 9 at this point. So basically A, B, and C at this juncture. All right. So this gentleman, his name was Al Capone. Al Capone was a mobster. I believe he originally started out in New York City, but then eventually moved his operation to Chicago, in which he ran uh, a, an outfit for a number of years in the 1920s into the 1930s. He made his money on illegal activities. One of them was the distribution and sale of alcohol. Yes, alcohol was illegal in the United States from 1919 to 1933. Even though it was illegal, there was still lots of demand for it, and so he made a lot of money on on alcohol, but also drugs and other gambling and other vices, so to speak. But the point I'm trying to make with Al Capone is that he did a lot of really bad things. But the thing that actually got him arrested, in which he got put into jail for, and basically served most of the rest of his life in jail until he died at a fairly young age, I believe in the 1940s, was tax evasion. The whole idea of not paying enough taxes. See, if you don't pay your taxes for the income that you owe, the government can charge you, at least in extreme cases, of tax evasion, and you can go to prison. All right. One of the quotes that he is said to have stated is that the income tax law is a lot of bunk. The government can't collect legal taxes from illegal money. All right. Let me just switch something out here. So, questions, make sure you read 281 to 285 in your text. Don't really worry about the worksheet. You're filling out the worksheet as we go along. And as far as the taxation in Canada questions, that is found on the Mr. Equity assignment that you'll be doing at the end of this. The links here, I don't think I can play this link because it's a link from a movie called The Untouchables. And whenever I play some sort of link to a copyrighted material, I get flagged. And so I'm not going to click on that link. However, the link below, and let me just look at something here real quick before I do that. Okay. Okay. That's fine. That's fine. Okay. The link below is a short video that just kind of deals with the downfall of Al Capone, but it's not super important that you look at that link. Um, it's not that I'll test you on Al Capone and, if Al Capone was this and that, but whatever. We're just not going to worry about Al Capone as far as, knowing anything about that individual. All right. But like I said, it's all about tax evasion. Okay, so get your one sheet out. Okay, the sheet should be titled, and see if I can find that here once again. Um, it's going to be this taxation in Canada, and it'll look like this. So as we go along, take some notes. Okay. So governments collect taxes to pay for the services it provides to citizens. And it's done in different ways. We have federal taxes, in which the federal government takes in. And then we also have provincial taxes that each respective province has a different tax system. All right. So we need to pay for services done as far as our government as a whole. And we also need to pay for services done and uh, allocated through our provinces. All right. There are two types of taxes that you're going to need to remember. All right. The first one is an income tax. Okay. An income tax is based on the amount of money that you earn. Okay. So the more money that you earn, the more tax you pay. Okay. It is known as what is called a direct tax, meaning it comes directly off your paycheck. Okay. It is also something called a progressive tax. I'll explain the difference between the progressive and flat a little bit later, but it just means the more money you make, the higher percentage of money is taken off. Okay, so as you become wealthier, there is a progressively higher amount as far as a rate of money that is taken off the income that you earn. Okay, and that's called progressive taxation. All right. So once again, income tax is a direct tax that comes off your paycheck. It's based on the amount of money you earn, and it is progressive. And I'll show you a chart of what progressive means in a few moments. The other type of tax that I'm sure you're familiar with is a sales tax. And sales tax is called an indirect tax, meaning that it's not directly taken off the money you earn, but it's based on what you spend on goods and services, on products. Okay. So the more you spend, the more you pay. The difference with a sales tax, however, it is a flat tax. A flat tax means that regardless of how much you spend, you pay the same rate. So, for example, our GST would be a sales tax. Okay, we all pay 5%, uh, whatever we buy as far as a good or service on the GST. It is also called an indirect tax. So, in your notes, make sure you fill all that information in between income tax and sales tax. All right, so there's that. So let's talk a little bit more about this progressive and flat. Okay, progressive once again. Well, flat is easier to understand. Flat is we all pay the same rate, regardless of how much money we earn, okay, or pay or whatever. So, a flat tax would be, for example, a 5% tax on GST. Um, a flat tax would be, some churches, you know, ask their members to pay a certain amount of money. Maybe it's at 10%, and that's a flat tax. Okay. And it's regardless of income. So a person with $1 million would pay the same rate as someone making $10. Okay, that's flat tax. Your more individual thinker would like that policy more because it doesn't penalize the person that makes more. They're paying the same rate. And it's, like I said, based on a system of this nebulous term called fairness. The other type of taxation, however, is that the more you make, the higher percentage is now being taken off. It is based on your income, and you pay more, not just more as a sum, but more as a rate the higher you go up. Okay. Some people call that in a taxation system a tax bracket. And so if you make a certain amount of money, you pay a certain rate. And then as you go higher, you pay a higher rate, and so on and so forth. So that is progressive. Progressive means continually moving more and more and more. So let's have a look at this is a very simplistic look at progressive, and I think there's a better one down here. Yeah, that is. Okay. And like I said, so your income level, it shows what a flat tax. So it just depends. You're paying 18%. So regardless if you're making $100,000 or if you're making $20,000, you're paying the same rate. Whereas progressive, the more you make, the more you pay. Now, I don't really like this so much because, as far as our income tax goes, yes, as you can see, 41% is certainly higher than 15%. I really don't want to confuse you too much, but, like, for example, if you make $200,000 and the highest tax bracket is, say, 40%, you're not going to be paying 40% on that whole $200,000. Okay. There are brackets in which you pay a certain rate. And the more you make, the higher the rate becomes. So I believe this explains a little bit better. All right. So in Canada, and this might be a couple years ago now, you pay 15% on the first $47,000. Now, there's a number, I think it's about $11,000, $12,000 where you pay no taxes. Okay, but anything after that, you're paying about 15% on that first $47,000. Okay, but then the next $47,000 that you make, that gets taxed 20.5%. So anything in between 47 and 95, you're now paying 20.5% of that income in tax. Okay, so you pay 15% on the first 47,000 you make, but then you pay 20.5% on the next 47,000 that you make. Okay, so that's the progressive piece of it. You're progressively starting to pay more. Now, if you make more than $95,000, anything between 95,000, as you can see here, and 147,000, you're going to pay 26% of that in income tax. Okay, so once again, you see how the number goes up. And then continuing on, anything over 147,000, now you're paying 29% of that income in uh, income tax. Okay, so as you can see, the tax brackets, as you go up in income, the more percentage is taken. And then finally, any income over $210,000, okay, you have to pay 33% of that to income tax. Okay, so in other words, if you pay $210,000, you're not paying 33% of all of that in taxes. You're only paying 33% of it that's over 210. Okay, and then in the subsequent numbers that are lower, you pay that rate within that set of numbers. Hope that makes sense. All right. Alberta, also a progressive taxation kind of system in which you pay 10% on the first 131,000 of your income, 12 on the next 26, 13 on the next 52, 14 on the next 104, and then anything over 314 you pay 15. Okay. So that's another example of progressive. All right. So all this money that comes in through sales tax and progressive tax, it gets pooled in by the federal government, and that becomes the tax base. Okay. Now, from the tax base, you get a model. Okay. A model is a policy. We talked about what a policy is, a plan of action regarding taxation that describes what to tax, how much to tax, and how to spend it. Okay, it's the plan of action. You have the base, and from the base, you develop a model. All right, so how do you get to that model? Well, you have to establish a base. Your jobs and income, people pay taxes to the government. That is the base. Okay, the base is the set number. Maybe it's $50 billion. We'll just use that as a number. Okay, that becomes your taxation base. From your base, you develop a model on how to spend it. Okay, and then subsequently how to tax in the future. So the model is what you do with education, what you do with income assistance, what you do with social programs, what you can do with infrastructure development, what you do with defense, what you do with whatever. The economic activity that government tax is called the tax base. The tax base pays for services like social programs. And once again, in your notes, okay, you'll put that right here, taxation model. The activity that government's tax is called the what? Okay, you should be able to identify that. This pays for services like social programs. All right. Here's just a diagram that talks about what the taxation model is. Citizens of Canada, as you can see here, will pay their taxes, and that creates the taxation base. Okay. The Government of Canada then comes up with a model. They provide support and services to the so called citizens of Canada, and then the cycle continues and continues and continues. One thing to understand, though, is that a lot of times with the model, we spend more than we bring in. Okay. If a government does that, you create what is known as a deficit. And if you do it over a number of years, you start ringing up a debt. I probably should show you a diagram of how much debt our government is, both provincially and federally, because we seem to spend more than we bring in. Here's a diagram from your textbook that talks about what do taxes pay for in Canada. First is a diagram that shows the Canadian government back about 14 years ago. It seems like 32% of what they spend on is social services, affordable housing, pensions for senior citizens, monies transferred to the provinces through social transfer. So that's 32%. The next highest would be debt. Okay. Well, when you are spending more than you're bringing in, you are going to incur a debt. And so over time, you have to pay interest for those debt charges. Okay. So that's 15% of our whole spending based on debt charges. All right. 10% goes to healthcare that is transferred to the provincial governments. Some other numbers: 12% protections of persons and property, for example, defense and policing. Okay. And then some of the other smaller numbers: 16% for other, 2% for recreation culture, 1% for environment, 3% for education, 3% for foreign affairs, etc. All right. So now we look at the provincial governments. Now, we get a lot of our money from the federal government. Okay. But then we get to divvy that up. Okay. That money that is transferred from the federal government, we as provinces get to decide what goes where, etc. So 33% goes into healthcare. Looks like the next biggest one is 25% goes into education. Okay. Then you have 15% into social services, so provincially funded social services, affordable housing, child protection, income assistance, and then some subsequently smaller numbers. For example, resource conservation industry, we have transportation, we have other, and then some other things like so. All right, so this kind of gives you a diagram of how taxes are allocated. Okay, what is the tax program, both federally and provincially? All right, a couple more terms to talk about.
Mrs. Halliday, can you please contact the office? Mrs. Halliday, please contact the office.
Excuse me for the interruption. So, the underground economy and the black market and tax evasion. Okay, so let's have a look at this cartoon. Soft drinks, soda ban, and the guy goes, "Psst, I got what you want." Okay, so he's selling these soft drinks from the black market. There's going to be a demand for soft drinks. Um, People be willing to spend a little bit more. This is somewhat like what happened during Prohibition when alcohol was made illegal, but yet people still wanted to buy it. And so people like Al Capone would be able to offer that service for individuals at a higher price. All right, so underground economy, the definition of the underground economy is people who work without paying taxes. It functions in secret from the government. So, if you work for a friend and they give you money, okay, for that service provided, and you do not report that to as far as your income, that is an underground economy. The local handyman, the local seamstress, okay, that gets money in the form of cash. It is much more difficult to trace where that goes than something that's done through electronic, through Interact or something like that, or through credit card. So that is the underground economy. Here is a quick clip on the underground economy.
Companies in Canada cash in on tens of billions of dollars in business that is not on the book.
Technical difficulties. Please stand by.